Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Valesky, and we have John Carter on the line, president of Simpler Trading. John, this definitely wasn't a week where trading was simple.
Depends how you look at it. It was certainly more volatile, which in the trading world is always creates better opportunities as long as you know how to control that risk part.
Okay, let's just go back to Monday morning, the day the world was turned upside down there. And I know that, you're dealing with, experienced and inexperienced traders. I'm sure you were trying to, give advice. Just kind of, walk us through what your thought process was Monday morning.
Well, so first of all, I think it's always important to look at, from a technical perspective, just look at what's in front of you. And on Wednesday, Thursday, and Friday, I mean, there were bearish signals all over the place. Like, there was no reason to really go home over the weekend long. And so we had established, we had put positions in Google, long puts in Netflix, some short NASDAQ futures over the weekend, just based on what we were seeing. So Sunday night and then Monday morning was a little like Christmas morning just based on that. But we had no idea, of course, that the extent of the carnage on Monday. And it was kind of a mini flash crash with margin calls. We hit actually limit down on all the indexes pre-market, which was 5% pre-market. And then as soon as the cash session opened, boom, the margin calls hit, and we went to the next limit down. And that was just it was actually hard to get out of positions. It was really hard to do anything. And that part was, was honestly a little frustrating because it was kind of like, wow, if you're positioned for this and you've got all these potential profits, but it actually took a little while to kind of get out of it.
It did.
Which was fine. But then the question is, what do you do next? So the volatility has been fantastic. It's not clear one day or another, if the market is now going to be up 300 points or down 300 points. And in this kind of environment, it is critical for traders to understand how to read basic market internals, like the tick indicator. The NYSE tick indicator can save your bacon. And if you understand how to read that stuff, then this kind of market isn't that scary. It actually provides a lot of opportunities.
So you were first trying to get out of manage the winners that you had, and there was probably some extreme profits there that you couldn't get to. I mean, I guess on one hand, being shorter term traders, or I guess even intermediate or swing. I guess if you would have had some GTC in there, you probably would have got done on them, right? Like, let's say you put an order in to buy, 10,000 GE at 22, and it was in there GTC. I know a lot of different brokerage firms had problems. Chances are that was on the book, and for extreme situations. So all right. So you had some winning positions to manage. Okay. When you finally got out of those, then where was the market? Did you have time to start initiating new ones, or was it just that big of a? I mean, were your systems down? Because I know a lot of people had systems problems.
We had, and I used a number of different brokers, and there was a couple that that locked up for about 10 minutes or so, but there was other places where we could at least get quotes and kind of see what was going on. Others were stable. So it was kind of a mixed bag there. So the thing is, on something like this, and whether you're, from a trading perspective, there's always going to be, I kind of consider myself, my sweet spot is holding a position for about 2 days to 2 weeks. That's however you want to call that. I call it swing trading. But in this kind of environment, you have to adapt, and you cannot commit to something that's being in a position for a couple of days. As we've seen, these markets have been turning on a dime, and nobody really wants to hold a position that's going against them. When the S&Ps are going up and down, 80 and 120 points at a time, and so it does become more of kind of a timing. And the other thing in a market like this, especially if you have like a big day on Monday, we have a saying in our office from a guy named Tony that just always says, look, making money in the markets is easy. It's keeping it that's hard. Mm-hmm. And one of the first things that we did was had everybody just reduce position size. So, Monday was a big day, best trading day of the year. from there, don't let euphoria go to your head and start just chasing the market, trying to trying to replicate that success again. So it's just, hey, let's cut down the position size, follow the internals, and this has been a week where we haven't had a lot of overnight exposure. I mean, I came in this morning, my account's 90% cash. I'm looking for some opportunities, and let's see what happens.
Right, and that's another thing too that we stress on the show. When the markets are moving like this, if you're a 1,000 lot trader, I mean, you don't need to be trading 1,000 lots. You can make just as much, more with 400 or 500 shares. If you're a 5 lot S&P trader, you can cut it down to 2 or 1. I mean, because a lot of times these situations you have to scale in and out of things. So, all right, let's just talk about Tuesday a little bit, and those selling balances hit and just got the ball rolling here. Did you have were you able to take advantage of any of that movement?
So now Tuesday was interesting. So we got the nice, kind of gap up, and typically if there's a big down day like on Monday, if the next day the markets gap up, the odds of them rolling back over and dying are very high. Where the market kind of head faked a little bit was that it wasn't rolling over and dying. So we gapped up, we traded sideways for a while, we're watching it. I actually started nibbling on the long side, thinking that we're going to get a short squeeze. But once S&Ps rolled over, and again, going back to the internals, when the NYSE tick started hitting minus 1,000 ticks, at that point it was game over. So you get out of the longs, reverse, and the nice thing about these kind of markets is that the trends are immediate and sustainable. So you can get into something like that, and you can just stay in it until the ticks turn back. And that was something where riding the S&Ps down 30 and 40 points, not that difficult to do just by doing that. Even though I started off on the wrong side of the market, was able to quickly reverse, and another good trading day.
Could you explain the tick for us and how you use? I mean, it's TICK. What it is and how you use it?
Sure. So it's just it's the tick just measures. It's based on the New York Stock Exchange index, and the short version is pretend there's 3,000 stocks on the New York Stock Exchange. If the tick reading is plus 1,000, then that means that of 2,000 stocks at that moment in time are ticking up while 1,000 is ticking down. Most of the time, the ticks are like plus or minus 400, meaning that hey, some stocks are up, some stocks are down, and there's not really any conviction in the market. When a bunch of buy programs hit, and only buy programs can sustain a over plus 1,000 tick reading, okay, and that's an extreme. Like retail can't do that. So you've got to have a coordinated effort, a lot of buy programs, and when you see that, it's just like you do not stand in the way of that. And the same is true to the downside. We saw, minus 1,000, minus 1,200, just hovering around there. And when you see that, that is sustained selling, and that's just something like, okay, if you're going to buy this thing, you got to wait until that's over. And and that's the kind of thing where it's just super useful. And there's a tick for the Nasdaq and a ticky for the Dow, but they all kind of move the same. And to me, that's a priceless indicator just to have on my chart.
Is it a contraindicator? You didn't when it gets to when I looked at it, if it gets to a negative reading like that, it could stay there for a sustained period of time. But once it comes off that, then it's a huge contraindicator, right?
Yeah, and Joel, and you brought up a good point there. So in normal market conditions, like choppy market up and down, if there's like I say a minus 1,200 tick reading, that's actually a buying opportunity because it's kind of like, oh, this is a quiet market, and suddenly we just got some extreme selling, and let's buy it because after that happens, we're going to go back to quiet. In this kind of environment, the ticks are actually more sustained, and you do not want to fade it. So when you see something like this where the VIX pops up, over 30, then you go with the ticks. Otherwise, if the VIX is normal, 13, 14, 15, then you can fade the ticks.
Right. I think I used it more when I was trading multiple, large stock positions, to get a general feel for it. Now that I'm trying to, trading a little bit more of the options, having a little bit longer term approach, even for a day trade or a 2-day trade, it's really not as relevant. But it is a very good indicator. So we reviewed a lot of what happened in the week so far. I've stated on the show several times that we're trading in the vicinity of Friday's close, which was 1971.50. A lot of people got whipsawed. I mean, I'm just not talking about the little guy, but some big money, which was probably already trailing the market, had some big swings today. I mean, we're right back at Friday's close. It's like a replay. How are you looking at it? How are you interpreting the market?
Well, today is going to be interesting. I mean, I'd be surprised if we don't roll over and sell off today. I think the best attitude, obviously, in this kind of market is just wake up expecting that anything can happen. From a simple technical perspective, we've retraced 50% of the fall, give or take 50% of the decline from Friday's close to Monday's low. So that's just kind of your nice, although fierce retracement rally. So we're at the line in the sand here, and I'd be surprised if we saw a big rally today. It would make sense that maybe we close near, 1970 to 2000. Just from a derivatives perspective, I mean, there's a ton of open interest on the S&P 500 options at these levels, and the big boys kind of tend to push the markets around to make sure, all those options they sold expire worthless, and that's accounting for more and more volume every day.
Yep.
But I think we end up kind of, near between 1970 and 2000 or down. I'm not looking for today to be an up day. If it's an up day, I'll be surprised.
Scott, I'd love to get your take on if there's anything you're looking at, on your short radar, on your long radar. What kind of sticks out to you today from a trading perspective?
Okay, so for individual stocks, one that I bought yesterday is SCMP, so it's like Scott, Cat, Mary, and then P as in Paul. Yesterday it hit new 52-week highs, so
Wow.
It's like a $27 stock. It's all-time highs. I think it's a pharmacy company, so it's it's the right sector. And what I loved about it is that it does not care what the market is doing, and that's the kind of stock that I want to be long in.
Honey Badger.
And I'm sorry, Brianna. What did you say?
I said Honey Badger. That's what any stock that's
Oh,
kind
Honey
of
Badger.
yeah.
The Honey Badger stock. Honey Badger don't care. And,
Yeah.
totally agree. So I like that stock because it's kind of doing its own thing. In terms of more of the the bigger stocks, I've really just been watching 5 stocks all week. So Tesla, Netflix, Amazon, Google, and Apple. And I mean they're going to move with the markets, but they're also going to participate in an interesting way. So yesterday I was interested in Tesla. It was had a greater than expected move. I think some news report came out or Consumer Reports rating, but that stock's interesting because it has a high short interest, and so when it gets going, it can sometimes have an exaggerated move. So for the long side, I actually like that to see if there's going to be some more upside today. And then for the downside, from an options perspective, you kind of want to be able to get in and out of these stocks fairly quickly in this market. Apple's nice because it's already in a pretty sustained downtrend. I mean, it broke before the market did. The spreads on that are tight. If you want to buy puts and be able to get out, those are. I found in this kind of market, you got to keep your focus very simple. So I'm looking at the indexes. I'm looking at those 5 stocks. There was that Honey Badger that popped up, and that's been kind of my world for the last week.
Are you concerned about interest rates at all? Do you care what the Fed has to say, or you just like doesn't even affect your trading perspective?
It doesn't. Well, it's a little bit of both. I mean, it doesn't really impact. The shorter term trading. I think it's a fantasy personally that the Fed's going to raise interest rates anytime soon. I mean, in the short, it's when the debt was $4 trillion, we were paying $400 billion a year in interest. Now the debt's, over $16 trillion, and we still are paying $400 billion a year in interest. So they can't afford to raise rates. I think that, they have to talk like they are, and they'll probably end up just using this excuse as we better wait and see. But at the end of the day, for this, for the kind of trading that I'm doing, it's immaterial. I think the market knows at some point it's going to happen, and that's fine.
Yeah, absolutely. Well, we've got just a couple minutes left here. I'd love to get your final take on the market and what you're looking forward to for trading next week.
Well, so again, I think today is going to be an interesting one, and I think sideways are down today. I cannot imagine that this is going to be a V-shaped bottom, meaning that it would just I would be very surprised if we did not go back and retest the lows. So I think today is going to be kind of more of a traders kind of winding down positions, and we're going to end up where we end up. But next week, I'm looking for the markets to start rolling over and retesting the lows. So depending on kind of where we close today, I would like to have some light bearish positions into the weekend. But again, this has been a long, tiring week, and I want to sleep well with this weekend. So I'm going to keep it pretty light.
I can't blame you for that. We've been on the line with John Carter. He is the president of Simpler Trading. John, thank you so much for joining us this morning. We look forward to having you back soon.
Thanks. Always a pleasure.